In this video, I'm going to talk about partnership liquidation. What happens when a partnership winds up? I've already created a video on partnership formation. You can watch that video here in which I've explained how a partnership is established. Hi, I'm the commerce specialist. I create content covering learning outcomes of various academic qualifications and professional certifications, including life-changing business ideas and hacks. Let's talk about partnership liquidation. Here I've created a question which shows a balance sheet or a statement of financial position of a partnership. The partnership has available cash on hand 80,000. Other assets other than cash means land, building, equipment are worth 600,000. Accounts payable, the liabilities the partnership has towards outsiders is 80,000, and there are three partners A, B and C. They have invested 200,000 each. Now obviously if the partnership is about to end, it is liquidating. So liquidation means they have to sell their assets. Why? Because when a partnership starts, the partners invest money, and with the money they buy some assets and they carry on business. Now that they're closing down, they have to sell all their assets, pay all the liabilities, get the money what they invested. After some adjustments, that's how it is done. When we talk about liquidation, what happens if you go into the background, when a partnership starts, all the partners invest money. With that money, they buy different assets to carry on business. Now that they are liquidating, they are closing down, they have some assets like land, building, equipment, machinery, furniture, etc. So all these assets will be sold. When the assets are sold, there will be some gain and loss that would be distributed among the partners. In the end, they will pay all the liabilities, and whatever this ending capital balance is, they will get that in the form of cash most of the time. So if you look at this question, what is happening here is the other assets were sold for 900,000. So if you notice, the assets were worth 600,000 and you're selling them for 900,000. So the very first working I have here is gain or loss on disposal. On disposal. Or you can write sale of assets. So I'm writing here other assets. Other assets are worth 600,000. Sale proceeds means they were sold for. You can call it sale proceeds or sold for how much? 900,000. So obviously if the assets are worth 600,000 and you're selling them for 900,000, you are making a gain of 300,000. Whether there is a gain or a loss, that has to be distributed among the partners in the required ratios. So if you look at this, it says the partners shared profit and losses equally. So I am writing here distribution of gain. Ratio is equally means there are three partners, that means 1:1:1. That means all get the same. Total ratio is 3. Sum of ratio is 3. So what is the share of partner A? A's share in the gain is 1 divided by 3, 1 over 3, multiplied by the amount of gain, which is 300,000. So that comes to $100,000. Likewise, B's share is again 1 upon 3 into the amount of gain, which is 100,000. This is A, this is B, and this is C. So they all get the same. So C's share is again 1 upon 3 into 300,000, which is again 100,000. Now once we have the gain, we can start giving the entries. The very first entry is to show the sale of assets. Obviously we are selling, we are getting 900,000. So cash will be debited with 900,000 because you're selling the assets, cash is coming in. Your other assets you're selling, so you got to credit other assets. Other assets worth 600,000. And the difference is a gain. All gains and profits are always credited. So the first entry shows that you have sold your other assets which cost 600,000. You have sold them for 900,000. As a result, you made a gain of 300,000. In the second entry, you're showing the distribution of gain. How much each partner is getting. So if the partners are getting gain, their capital will be increased. Increase in capital is always a credit. So what you do is, when you recorded the gain, it's a credit. Now you're closing the gain, you debit the gain with 300,000. And this gain is transferred to partners account. Obviously, whenever partners get share of gain, their capital will increase. As per the rule of debit and credit, increase in capital is a credit. So you credit each partner's capital by 100,000 each. So capital A will be credited by 100,000. Capital B will be credited by 100,000. And capital C will be credited by 100,000. Gain is distributed. Please remember, when a partnership is liquidating, the partners cannot take the money. First, they have to pay the liabilities. So if you look at this question, the liabilities, the only liability they have is accounts payable 80,000. So now they have to pay this off. So when you pay a liability, decrease in a liability is a debit. So that's why I'm debiting accounts payable. Whenever you pay liability, liability decreases. And as per the rule of debit and credit, decrease in a liability is debit. So I'm debiting accounts payable with 80,000. And obviously we're paying cash. So cash is credited. So now if you notice, this cash which they had 80,000, that goes in paying the liabilities. And this cash which they received by selling the asset, that goes to the partners. Now if you notice, these are the initial capital of the partners, 200,000 each. And let me tell you, the capital balances are by default credit balances. When you distributed the gain, you credited their account again. So these are all credit, right? So a credit and a credit is always added. So A has an initial capital of 200,000. He got his share of gain 100,000. Now his capital balance at the end is 300,000. So we have to pay him 300,000. Because the partnership is closing, you debit capital of A. That means cancelling his capital. This is a disinvestment. How much? 200,000 he invested. 100,000 is his share of gain. So total how much the partnership owes to the partner? 300,000. Same goes for B. Initial capital 200,000, share of gain 100. 2 and 1 is 300,000. So we have to debit capital of B with 300,000. And then same goes for capital C. Initial capital 200,000, share of gain 100. Total payable to partner C is 300,000. So you debit the capital and credit cash with the total, which is 900,000. And this cash you got from here. So guys, these were the calculation and necessary entries when a partnership liquidates. Liquidation is also called dissolution. So don't get confused whether it is partnership dissolution or liquidation. It means they are winding up. In the same question, I've given a requirement. What if other assets are sold for a loss? So if you have a look at this, in part B, we are assuming that other assets are sold for 100,000. Their value is 600,000. But what if we are selling them for 100,000? Let's see what happens now. So when you go to part B, profits and losses are shared in a different ratio. It's not equal. It's 1:1:3. So the first one is A, this is B, and this is C. 1:1:3. Other assets are now being sold for 100,000. So what I'm going to do here is, this is part B. Again, I'll do the calculation for gain or loss on disposal. So this is a calculation for gain or loss. You write other assets. Other assets worth 600,000. Sold for, or you can write sale proceeds. Now you're selling them for 100,000. Obviously something for 600,000, if you sell for 100,000, you will make a loss of 500,000. This is loss on realization, or you simply call it loss. If there is a loss, that is to be shared among the partner in the given ratio. The ratio is already given in the question. So the second calculation is for distribution of loss. Ratio being 1:1:3. This is for A, this is for B, this is for C. So if you add these three, sum of ratio will be 5. So A's share in the loss would be 1/5. B's share in the loss would be again 1/5. C's share in the loss would be 3/5. Multiplied by the value of loss, which is 500,000. So A's share comes to 100,000, B's share comes to 100,000, and this C's share come to 300,000. Now guys, especially in liquidation, if there is a loss, you got to be very careful. Why you have to be careful? You have to look at the partner's capacity to bear the loss. So if you look at capital A, his capital is 200,000. Yes, he can bear a loss of 100,000. After bearing a loss of 100,000, he is still left with 100,000 in his capital balance. If you look at capital B, if you look at B's capital, it's 200,000. Yes, he can bear a loss of 100,000. But if you look at capital C, the capital balance is 200 and the share of loss is 300, which is way above the capital balance. If this happens, we call it capital deficiency. Why? Because C's capital is only 200,000, but its share of loss is more than 200,000. If that is the case, we say C is capital deficient. It does not have enough initial capital to bear the existing loss. So what happens in such circumstances? When a partner is deficient in capital, cannot bear his or her share of loss, the other two partners, they bear this loss. So here, C's capital deficiency will be met by A and B. How? This is the third calculation. I am writing here C's capital deficiency met by A and B. Now obviously the capital deficiency is, the capital is 200,000, share of loss is 300,000, so it is 100,000. 200 minus 300, 100,000 is the capital deficiency. That would be borne by the other two partners, which is A and B. And the ratio is 1:1, A and B. So ratio for A and B is 1:1. So total will be 2. So A will contribute 1/2, B will contribute 1/2, which is half. And what is the capital deficiency? Please remember, the original capital minus share of loss, which is 100,000. So this will be 50,000. They both will bear C's share of extra loss, 50,000 each, because the loss was 100,000. Now coming to the entries. The first entry is to record the sale. Obviously we're selling, cash is coming in, but how much cash is coming in? Only 100,000, because we're selling it for 100,000. Cash is coming in 100,000. Other assets you will credit, obviously it is sold. Other assets, decrease in assets is a credit, and the difference is a loss. All losses are recorded as a debit. Loss on sale, which is 500,000. If there is a loss, that is to be distributed. This was the distribution of loss. When partners get share of profit, their capitals are credited as per the rules of debit and credit. Increase in capital is a credit. So when partners, in the earlier example, when partners got a gain, their capitals were credited. But if there is a loss, their capitals will be debited. How much? Debit capital A, B and C with these amounts, because loss is being shared. Decrease in capital is a debit. Capital A debit with 100,000. B's capital will be debited with 100,000. And C's capital will be debited with 300,000. And loss is a debit. To close loss, we credit by 500,000. Now here, because C's capital, initial capital was 200,000, but the share of loss is 300,000. The extra loss is 100,000, which is borne by the other two partners here. So the entry for capital deficiency met by other partners is that you debit the capital of partner A and B with the amount of loss they are sharing, 50-50, because they are sharing C's share of loss, so their capital will be debited. And capital of C will be credited because his loss has been, shared. So if you look at what was C's capital, 200,000 initially credit. Okay, C's capital was credit of 200,000. In the loss, it was debited by 300,000. So credit 200,000, and debit 300,000 gives you the balance of debit 100,000. That debit 100,000, when you credit by 100,000, that brings C's capital to 0. After this, I don't have space here. We have to pay accounts payable, which is 80,000. So accounts payable debit and cash credit 80,000. In the end, as I told you, C has an initial capital of 200,000. Then it was debited here by 300,000. So it has a debit balance of 100,000. And then it is credited by 100. So debit 100 and credit 100, C's capital balance is 0. That means at the time of winding up, at the time of liquidation, the partnership doesn't owe anything to C. Why? Because C could not bear his or her share of loss. So what we are left with is capital A and B. A's capital initially was 200,000. Then it was debited, means reduced by 100,000 because there was a loss on sale of assets. Then it was debited again by 50,000 because he bore C's share of loss. So 200,000 minus 100,000 of loss on sale of assets. So balance is 100. 100 minus 50 because he contributed to share his loss. So he's left with 50. So in the end, the last entry I am giving here, capital A will be debited with 50,000. Capital B will be debited with 50,000. Why? Have a look at capital B. 200,000 original balance, credit balance, debited by 100, so you're left with 100 credit, debited by 50, you're left with 50 credit. That credit is debited here and you credit cash by 100,000. So if somebody asks, how did you get cash 100,000? So let me explain. You had 80,000 cash available. Then you sold assets for 100,000. So total cash available is opening balance 80,000 and 100,000 here, 180. Out of 180, you paid liability 80,000. How much you're left? 100,000. That is paid to the partners. So ladies and gentlemen, I hope you have understood this topic. One thing I need to remind you is, when we're talking about capital deficiency shared by other two partners, generally it is shared in the ratio of their capital. If you look at the question here, their capital balances are the same. That means 1:1. Generally, capital deficiency is shared by other two partners in the ratio of their capital. The partner who has more capital will take more share of loss, and the partner which has less capital will take less share of loss, because it's an additional loss. It is not their loss. They're sharing other partners' loss. So the logic is, the more you have capital, the more you may be asked to share loss of other deficient partners. But here in this question, because the partnership profit and loss sharing ratio was given and the capital were the same, so they shared it equally. So guys, if you have any question relating partnership liquidation, please feel free to leave a comment. Guys, if you're not yet subscribed to my channel, please subscribe to my channel, press the bell notification button so that you get my videos on a timely basis. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.